Welcome everyone to today's ISTAT Learning Lab. My name is Jen Zhu. I'm based in Singapore with Alton Aviation Consultancy. In today's Learning Lab, we welcome our returning guests, John and Evan, to continue their discussion on the ABS market. John and Evan started this ABS series back in 2021, and today is the third year that they are presenting a market update on this topic. For the previous ABS sessions, you can access the recording on the ISTAT website. Before we start our discussion today, I will provide a short bio of John and Evan for our audience who might not have participated in our previous ABS sessions. Mr. John Mowry is the co-founder and managing director at Alton Aviation Consultancy. John is a trusted advisor to lessors, equity and debt investors, and operators on a wide array of aviation asset classes. Accredited as a certified appraiser by ISTAT, John has advised investors on the selection, acquisition, and financing of billions of dollars in aircraft and aircraft operating leases. Mr. Evan Wallach is currently president and CEO of Global AirFinance Services, with a primary focus on advising institutional investors on investing in bonds and other securities issued by aircraft and engine leasing companies. Evan also advises aircraft leasing companies on the purchase, sale, and financing of aircraft and aircraft engines. The format of today's session is that John and Evan will jointly present their views for about 60 minutes, and then we'll open up an audience Q&A session at the end. So we'd like to encourage the audience to use the Q&A button at the bottom of your screen to send in any questions you might have as we go along this session. So now let's welcome John and Evan to start their presentation today. Thank you.
Great, Jen. Thanks very much for your fine introduction. Evan and I are delighted to have an opportunity to participate in another ISTAT Learning Lab, this being our third in as many years. As you can see from the title, our presentation is focused on an update around the ABS market for aviation, and our objective is to share with the ISTAT community what the state of play is. So let us jump in. Just in terms of our discussion points for today, and let me make sure before we jump in, I'll need to share our screen. Great, I think we should be aligned now on the screen share. So what we have in terms of our agenda today is I'm going to take the first couple of sections where we're going to review the current dynamics of the air transport and aviation market broadly, and then I'll move into cover sort of the overall financing market for aviation, and of which the ABS market is, of course, a subset. I'll turn over to Evan, who's going to introduce the structure of ABS issuances, priority of payments through the typical waterfalls. And he's then going to jump in and review some of the performance and pricing in today's market for some of the pre-COVID issuances. I'll then cover the post-COVID issuances, and then we'll share some concluding remarks and thoughts on a future outlook. And as Jen shared, finally, at the end of the presentation and the session, we'd be delighted to answer any questions that we can to the best of our abilities. So without further ado, we'll begin first with the review of sort of the macro context for the aviation industry. Look, it won't come as a surprise to any constituents of the ISTAT community that the broader aviation and air transport market has been challenging over the past couple of years. The COVID spike caused passenger traffic to fall off by more than 90% in the second quarter of 2020, an unprecedented experience for the industry. But as we can see from the chart on the left, which is showing air traffic demand as a percentage of the pre-COVID level, we've been very fortunate to see a fairly strong and robust global recovery. And as of June, July 2023, air traffic demand on a global basis was only off 7% compared to the pre-COVID levels. So it's a substantial improvement, and I think markedly, if you look at where the industry was 1 year ago, it's around a 20-point improvement in the overall situation. The Americas, both North and Latin South America, led the recovery, and in all of the Americas, the regions have surpassed pre-COVID traffic volumes. But the biggest change over the last year has been in the Asia Pacific region, which has nearly doubled. Around a year ago, traffic was less than 50% of pre-COVID levels, and we're now approaching 90% of pre-COVID levels. So the Asia Pacific recovery, which is dramatic and seen on this slide, is translating to overall strength in the global numbers. On the fleet side, what we can see is that the park fleet increased at the peak to more than 50% of the total. Aircraft of all ages were initially impacted by the downturn, but what we saw was interesting was that the level of reactivation of the fleet was correlated pretty closely with age. Airlines demonstrated a strong preference for reactivating and flying the most fuel efficient, newest, typically the greatest range capable aircraft. And so we can see that in the slide in the chart at the right, with the bottom line for aircraft less than 5 years of age. And in fact, the parked fleet of aircraft less than 5 years of age today is less than it was in the pre-COVID levels. And so that shows the strength of the recovery there. If we look at that midlife segment, if we define it as 5 to 15 years old, we're still above the pre-COVID levels. We're at 10.6% of the fleet today compared to closer to 7% pre-COVID. And on the older kit, over 15 years of age, still around 25% of the fleet is now parked, and that's above the sort of 19% pre-COVID levels. I think it is important to note that some of the aircraft that are still parked today would likely be in service. Could airlines, lessors immediately put the aircraft into service, especially for this recent summer season in the Northern Hemisphere. But there are some capacity limitations in the MRO, the aftermarket world across both labor and materials that is impacting the rate at which aircraft can be put back into service. So that's an important consideration to keep in mind. Given the sharp fall off that we had in air traffic, again, it won't be a surprise that aircraft values and lease rates fell. And this slide is showing lease rates as published by certain third-party appraisers for current generation narrow body and wide body aircraft. And we've selected what we call the current mid-generation narrow body and wide body aircraft, the 320ceo and the 737 NG narrow body aircraft at the top of the chart. And we've got the wide bodies, the 330-300 and the 777-300ER at the bottom, because these four types were largely representative of the aircraft that were put into the ABS issuances since 2015. And you can see the percentages of value or fleet that these aircraft types constituted within those post-2015 ABS issuances. So very relevant types to the ABS market and all the issuances that are outstanding. And we're showing here trends for 5, 10, and 15-year-old aircraft. If we look at the top left, for example, the 320-200, which accounted for more than a third of the total volume, we can see lease rates for a 5-year-old aircraft for appraisers, were the low $300,000 mark before COVID, and they declined to less than $200,000, during the worst of the pandemic. If we look at 10-year-old appraiser trends, what we can see is that they declined as well, but not by nearly as much on a percentage basis. And so what was a bit curious was that sort of the lease rate compression tended to be pretty high, even on the young aircraft. If you happen to get an aircraft back and you needed to place it, there was a good bit of pressure on those young aircraft. But I think if we compare sort of the top charts to the bottom, what we can see is that the narrow body lease rates generally declined by perhaps around a third, according to appraisers. The wide body lease rates declined by closer to 50%. From sort of a peak to a trough. We're seeing in the appraised trends, we're seeing sort of a recovery in lease rates that is great to see, particularly on the narrow body asset classes, but still sort of a slow recovery, or barely any recovery shown in sort of the appraised values, appraised lease rates on the wide body aircraft at the bottom. I would note that none of the lease rates are back to sort of the pre-COVID levels as yet. but our own market intelligence, would suggest that sort of the lease rates in the market for kind of all these types maybe fell a little bit more from a peak to a trough, but the recovery is actually becoming a bit more pronounced, and so there may be a lag in what's being published here. So we are seeing signs of recovery, I think, that goes beyond the trends that are demonstrated on the appraised charts. Leasing is both an asset and a credit play, and so I think it's quite relevant to consider some overall trends in airline financial health as well. And what we're tracking on the left is the trends in financial ratings, financial scores for a universe of more than 100 airlines over the past decade. And not to be confused, these aren't formal credit ratings, but indicators based on quantitative metrics of relative scoring of reported financials historically. And what we can see, we can still see some quite interesting trends, and there's a pretty strong migration from pre-COVID BBB and BB financial ratings for the pre-pandemic airline universe, downgrades into sort of the CCC and CC world, from moving from 2018, 2019 down into the 2021 trough. On the financial rating side on the left, we can see that there has been a slight improvement in 2023, but generally the financial position of airlines in aggregate today isn't what it was pre-pandemic. Many have taken on very substantial debt loads to sustain their businesses. Look, it's not all doom and gloom. There are many strongly capitalized airlines who happen to be flush with cash or equivalents, and they're executing strong financial performance in the recovery market. But on aggregate, we're in a different situation today than we were pre-COVID. I think if we look at the chart at the right, we can see the overall airline industry revenue, cost, profitability trends over the last decade and projected for 2023. And we can see the magnitude, the toll with which the COVID pandemic impacted airline revenue and profitability. The financial ratings that we're seeing on the left are, mirroring the significant losses that were incurred by the industry in 2020 and 2021. The industry nearly attained an aggregate profitability in 2022, and in aggregate across all the airlines is expected to be profitable here in 2023, but at a small margin. But given the challenging experience over the last couple of years, the small margin, of course, very much welcomed. Next, I'll move on to talk about some of the overall trends that we're seeing in the aviation financing markets, which is important to put the ABS market into the context of. And I think we can't proceed very much further before we talk about interest rates, which is effectively the one of the major costs of financing that's having an impact on global economies and also the aviation financing market. So what happened was, the economic performance globally, and industry-wide that was experienced by the world, in spite of COVID, was facilitated to a large extent by the central government's printing money. And we can see during COVID, the U.S. Treasury, dropped interest rates very, very significantly, almost to zero. As should have been or was anticipated, this market stimulation resulted in high inflation, and U.S. inflation peaked at north of 9% in June 2022, very much above the long-term averages. In Europe, inflation actually peaked above that level, and in many other countries, substantially above that 9% level. Well, what happened when inflation started to ramp up so significantly? The Fed started to take action to put it back under control, and they increased interest rates. So far, since the floor, they've taken action 11 different times, and interest rates have risen back up to levels last seen before the global financial crisis in 2007. So we're at 16, 17-year highs at the moment. These shifts in interest rates had a dramatic impact on the financing markets generally, including aviation finance, of course. I think if we look at the longer term trends, which is shown in the chart at the right, I think what's interesting is that the aircraft operating leasing industry, for most of its history, of course, perhaps it went back and started in, the first lease maybe was written in the 70s, but it was pretty nascent market even in the 80s. and then it started to gain in prominence 90s, of course, and this century. But for the most part, if we look at what has happened in sort of the bulk of the experience of the operating leasing industry, has been in an environment where interest rates have broadly declined. And I think that has always provided some support to lessors seeking to trade assets. They underwrote a long-term lease transaction in a certain interest rate environment, and held it on the books a couple of years, and interest rates gradually moved down. Trading that aircraft, for sort of book or a gain on book, would have been somewhat easy or easier to do, all else equal, than had interest rates stayed exactly the same. I think conversely, aircraft leases that would have been underwritten with thin rents in a low interest rate environment, we would think would be harder to sell when interest rates rise again, because the value of the cash flows that are attached to that are less. More of the cash flows are needed to service debt, and there's less in it for equity. So I think as we turn the page to some of the sort of commercial financing volumes, I think it's very important to keep in mind sort of the trends that we're seeing here on the cost of finance and interest rates. So here we are looking at commercial aviation financing volumes, and what we can see is that over the last decade, the total market has reached around $1.5 trillion cumulatively. On an annual basis, we peaked at around $150 billion in 2019, and then the market exploded in 2020, nearly doubling that level at $282 billion. This was, of course, following the onset of COVID, the reduction in underlying interest rates, base rates, as the governments looked to pump money into the economies to sustain the world economies, and of course airlines being recipients of that benefit and needing to benefit from the cash infusions or the capital infusions to sustain their businesses. So very heavy airline borrowing in 2020 that continued into 2021, but what we saw in 2021 was actually a significant increase in the financing from aircraft lessors, and they raised record amounts of financing to take advantage of the favorable rates. Some of that was through ABS issuances. Some of it was supporting merger and acquisitions and other term out of warehouse facilities, because there was very little of that activity in the prior year. Overall, what we see over the trends is the capital markets, shown sort of in the dark green at the bottom of the stacked bar chart, took on increased prominence, and it grew from roughly by a factor of 10 from 2011 into 2021, where it reached 125 billion. But what we've seen in 2022 and 23 was a very different environment than what we saw in 2020 and 21. And also compared to pre-COVID activity before 2019. In 22, the aviation financing markets totaled just 72 billion. And if we look at year-to-date figures and we prorate that out, extend that to full year, we're on track for around $78 billion of financing, which is around half of the pre-COVID levels and a third of the peak levels. What we see overall is that the proportion of financing coming from, you can barely see it on the charts, but from OEMs, ECAs, and sort of insurance-backed loans is quite modest. And it's really commercial loans and capital markets that are the primary sources of financing for the industry. And what we can see, overall, we see capital markets again at the bottom in dark green, declining very substantially relative to the prior years in 2022 and 2023. So let's zoom in then on just that capital markets debt financing, which we've done here on this next slide. And again, looking over the same time frame, we've got lots of different products and segments of this market, but we've got across the borrowers, we have both airlines and lessors who will borrow secured and unsecured. And then as a subset of generalized secured bonds for airlines and lessors, we have sort of the structured EETCs for airlines and the structured ABS issuances for the lessors. I think if we look at the overall volumes In the capital markets, what we see is that in 2019, 2020, 2021, airline and lessor unsecured bonds accounted for most of the volume. On average, over sort of the entire forecast period, unsecured issuances were only around 1/3 of the total volume, while secured issuances, sorry, I'm going to correct that. Over the sort of historic period, the secured issuances accounted for around 1/3, and the unsecured accounted for around 2/3 of the issuances. There's been variation, of course, in each and every year, but overall, what we see is that the proportion of lessor financing through the debt capital markets has been relatively close to the volume of airline financing through these markets overall. I think important to note is when we're focusing here on sort of the ABS markets, and in aggregate over this time period, a dozen years or more, the ABS markets have constituted around 7% of the total debt capital markets volume, and it has had a tendency to fluctuate significantly year to year. So, well, the ABS market has accounted for just 7% of the debt capital markets activity. We would suggest that in recent years, it had become a very important part of the market. And on this particular slide, we're comparing the volume of aircraft acquired by lessors on a secondhand basis, most of which would have been through trading with other lessors and acquiring those from other lessors with leases attached. We're comparing that volume of acquisitions to the volume of ABS activity. And we don't suggest that correlation is causality, but what we did see was that the trends were fairly well aligned. Increase in volume of ABS activity relative to secondary acquisitions of aircraft by lessors increased. And the rough proportion was reaching around 60% in 2021. The key sort of business model for most of the large tier 1 IG lessors has been to acquire new aircraft at low prices, either through their own order books or from a sale leaseback transaction with airline counterparties, season them for a few years, and then trade out of them. When the large lessors trade out of the aircraft with the leases attached, they've typically got a couple of options. They could, in some instances, a limited proportion, but they would sell directly to financial investors via the ABS market and issuing e-notes directly to those financial investors. In other instances, there would be trade sales to the lessors. Many of the midlife and those trade sales to other lessors would include sort of the well-established balance sheet lessors who have their own corporate financing in place. But in other instances, there were a lot of fund-backed platforms or investor-backed platforms that would frequently have warehouses financings in place from the banks, acquire the assets, package them together into an ABS, and then back lever them into an ABS debt solution. So I think when we looked at this presentation, we looked at this slide last year, we were anticipating a fall off in lessor trading activity for 2022 because of the reduced ABS activity. And indeed, it fell by more than 1/3 from the prior year, 2021. And I think, given sort of still limited activity in the new issuance markets for ABS today, which we'll discuss later, we see some pressure on sort of the volume of trading between lessors. And so we've seen some creativity where lessors are now looking to transact with other counterparties, such as airlines, who happen to be, flush with liquidity. Now, it's not to say that, there's no trading activity. It's only to say that the ABS market volumes are down, which isn't facilitating as much trading activity as we might expect. We do hear frequently that, within sort of the aviation circles, the ABS market is closed. And we did think it was important to demonstrate, that this assertion isn't factually correct. So the chart on the left stacks up the total ABS issuance over time, and it's broken out between aviation and non-aviation asset classes. So what we can see here is that even though there was robust aviation issuance in prior years, it still constituted only around 1% of total issuance. And there were a huge volume of other asset-backed securities that are commonly issued: residential, student loan, auto loan, consumer, et cetera. All these asset classes are substantially larger than aviation, aircraft and engine ABS. I think what we can see is that, volumes, of course, of the market, overall market fluctuated year to year. Issuance volume in 2022, continued so far year to date. It surpassed 150 billion. So the market's for sure open. It's just there hasn't been, to our minds, a meeting of the bid-ask spread between bondholders and issuers. We think this is economically rational behavior. The bondholders are looking at all of their opportunities to deploy capital into the ABS market across all these different asset classes. And, having come through sort of the COVID, the Russia, they have a perception around what the risk of the aviation asset class is. And they've not yet been able to, or not willing to fund aviation at economics that are sufficiently attractive for the aviation issuers to come into the market. And I think lessors, for their part, constantly engaged in looking at evaluating all financing sources that are available. They've simply found more attractive financing from banks, alternative lenders, some private placements, and so that's the reason that we haven't seen ABS market issuance here. So I think as we look ahead, what's going to be required to restart, there's going to have to be some sort of alignment between the cost at which bondholders are willing to finance the aviation asset class, and the point at which lessors will find that attractive. And so that's typically it's also going to require probably stronger lease rates to be able to cover sort of the higher interest rates. So we'll talk a little bit more about the potential reopening, but I'd like to turn it over to my colleague and partner on this session here, Evan Wallach, to talk about the ABS structure in more depth. Evan?
Okay, yeah. All right, thanks, John. Just, let's take in everything that John just gave us with respect to the industry, the macro environment. I wanted to do a quick review of basic air ABS structures, maybe for the people that weren't here last year or just want to get an update on that. But basically, we start out, with a picture that what impacts the aircraft ABS structures. It's the macro environment, it's the counterparty performance, it's the performance of the assets, and it's very important as to the performance of the servicers. So if we go to the next slide. Again, what is an aircraft ABS? It's a portfolio of aircraft, typically 20 to 30 midlife aircraft with attached contractual leases that run out another, say, 3 to 5 years. And then they're obviously expected to generate a series of cash flows, both from the existing contracted leases, as well as the servicer either extending the leases or finding new lessees or selling the assets. So basically, the first 6 years of the deal look pretty similar. You're collecting rents, you're collecting maintenance reserves, you're paying out for maintenance reimbursements. You, as the servicer or as the lessor, you may have had to make some top-up contributions to maintenance. Aircraft coming off lease with original lessees may have an EOL payment coming in. You also have transition costs, and this was a big impact during COVID, where instead of the typical 1 to 2 aircraft being transitioned each year, servicers had to manage, the entire portfolio and all the related costs associated with that. That would fall under transition costs and be paid off the top of the waterfall. And then as we get towards the end of the asset's life, we're looking at selling aircraft. And then we also have to pay for the servicer and the admin expenses in managing the portfolio. But this is a generic picture. You have 6 years of basic cash flows, and then year 7, you've got an expected refinancing or sale of the aircraft portfolio to pay off the remaining balances. Go to the next slide. We'll talk about the waterfall. So wanted to just highlight the generic waterfall that we see in most of the transactions. And basically, this is the rules by which the aircraft, capital has to be allocated as it's collected. Right off the top, we have to pay required expenses for administration, for legal, for trustees, for servicers to manage the portfolio. Then the next thing that comes is the interest payment to the Class A's, this is right at the top. And now typical deals have interest payments to the Class B's following right after that. If there's been a draw on the liquidity facility, which typically doesn't happen until much later in the deal, that has to be replenished right off the top. There is a payments now into the senior maintenance reserve account, which is basically an escrow account that looks forward over the typically 12 to 18 months of what maintenance expenses are expected to be paid out, for overhaul and maintenance invoices that are coming in. After that, we have scheduled payments, scheduled principal to the A, scheduled principal to the B. These are based on typical amort schedules of 12 to 14 years from issuance. And so each month there's an expected payment of principal that has to be met for the A's and the B's. The C's are paid out over typically a 7-year amort schedule. Anything left over, you pay into the junior maintenance account, which is just an additional escrow account for maintenance, future maintenance expenses. And then if everything is going well, as appropriate, you get down to payment of interest to the C's, payment of principal to the C's, any other ancillary expenses, and then finally payment to the whatever's left over, payment to the equity. So during pre-COVID, the cash flows that were coming in, almost all the deals kind of met this waterfall and did get down to payment to the equity on a monthly basis. Next. So based on the waterfall that we just went through, again, this is just a generic, typical picture of what the amort profiles would be for the A, B, and the C. As you can see, the A's and the B's are paid out on a 12 to 14-year amort schedule. So typically by year 7, the balance remaining for each of them would be 45–50% of issuance. The C is expected to be repaid in full over this initial 7 years. So the theory is that at the end of year 7, we have the anticipated refinancing date. And so you've paid off the C's in full, you've paid the A's and the B's down to 45–50% of initial issuance. And so that your future aircraft values, should result in a ratio of LTV, which, will enable the A's and the B's to be paid off from a new issuance of an Air ABS deal or structured financing. Or you could have a sale of the portfolio at that point, also to pay off the remaining A and B balance. So this is what things look like, up to COVID hitting the market. Okay, next. So with that in mind, let's take a look at the performance of pre-COVID issues. And we went through this last year as well. But before we do that, we wanted to go over, a generic profile for what the lease contract would look like for a typical midlife, A320 or 737-800. So the top line shows that for the typical contracted and future rent for that kind of aircraft, you've got the remaining contracted rents for that plane that went into the deal. At the end, either the lessee is going to renew it or extend the lease for another couple of years, or the servicer will move that airplane to another lessee. And then finally, at the end of its, say, 15, 16-year life, you then maybe, would put the lease out on again to a third tier type of lessee at a lower rate. And so this is what the profile looked like for your generic midlife aircraft, and the NPV for this particular calculation came out to about 24 million. So the middle chart shows what happened during COVID. We had an initial contracted payments up to Jan of 2020. Then you had negotiations with lessee and servicer. Some of the lessees were able to say, look, I can't pay enough now, but I'll make it up, in years, the next, 2 or 3 or 4 years from now at a higher rent, get us back to where we were supposed to be, by say Jan of 25, then go back to the typical schedule of renewal at a lower rent for another couple of years, extend the lease out a little bit further as another part of the trade. And then finally, at the end, either the lessee keeps it or gives it back to the servicer and it gets released or sold at that point. But basically, the calculation gave you a similar NPV, maybe with a longer weighted average life and duration, but basically the raw collections would have been the same. What happened with a lot of the lessees, if you look at the third chart, is that we had contracted rent till COVID hit. Then we had nothing. Basically, many of the lessees, which is not unexpected given the credit profile of most of the midlife ABS portfolios, you basically had nothing being paid for a number of months. And so then how do you catch up? Well, the lessees still weren't being able to pay much. So maybe they went to power by the hour, maybe they went to deferrals again, but again, projected out with being able to pay, much less than what they were supposed to pay, expected to pay when the bonds were issued. And then when you get to a renewal of the lease, you're probably at the same level where you were previously. Another couple of years, maybe extended out a little bit further. All in all, though, the result is you end up with an NPV of the cash flows of about half of what you were expecting to get and what you were receiving pre-COVID. And so let's keep this in mind for your generic A320 and 737 800, which make up about 80%, of the air ABS issues of aircraft and ABS issues. Okay, next. So what do we had? First we had COVID hit, and then we had Russia hit. So this is a picture of what we saw in the impact on ABS issue by year of issuance. 2015-16 issues. The green represents performance of their deals, roughly 60-70% performed. Servicers were restructuring, 30 to 40% of those leases. And then in some cases, there were few Russian aircraft in those deals. What we saw in 17, 18, 19 is that things got really loose. Many more aircraft were being leased into jurisdictions like Russia. And they were paying, they were good lessees, they were performing, there wasn't any expectation of what happened. But at the end of the day, we can see that we still had, of the 18, 19 deals, 70, 75%, performed, and then the balance had to be restructured. The 21, 22 deals you can see were, it was, the 120-22 deal, actually fully performing, and even most of the 2021 deals continued to perform. But we think John will talk about this a little bit later. Better lessees, younger aircraft, longer leases. So and also we've kind of gotten through the worst of it. So not unexpected to have some performance. A little bit about Russia. Still 400 plus aircraft being confiscated by the Russians. Nobody knows how this is going to play out. This huge battle going on between, the global insurance companies and the lessors, being played out in various jurisdictions. There was an event last week where AerCap was able to settle a claim on 17 planes that they had with Aeroflot for $645 million. I think it was like 70 cents on the dollar. This was probably a one-off settlement with Aeroflot to settle on those aircraft. It still gives AerCap, a claim for the unpaid amount against the insurance companies. But unfortunately, this is being played out, and I think most of the air ABS issuers have written those planes off from any kind of expected cash flow. I mean, I think everybody believes there will be some settlement, and it could be. Most aircraft are insured for more than their, CMV. So, there could be a significant payment aircraft on insurance proceeds, but nobody knows right now when and what it is. So I think most people are just putting that aside and waiting to see what happens. We updated this slide from last year. We took 4 of the 2018-19 AirBS deals and looked at at collections for these deals and what the DSCR is today. Again, you can see a chart on the left. December 19, everything's on track. Big fall off in December 20, some pickup in 21, but if you look at where we are today, certainly a pickup, on most of the deals on collections, back to 50-60% of where they were. And then if you look at how this translates into the DSCR, which is typically a 6-month lagging indicator, you can see that those are getting worse from last year. We're down below, most cases below 0.5, on collections. So basically it's a good metric to have, but as I said, it's a 6-month lagging indicator. What it does say is that the A's, are far behind and have to be catching up. So I think we'll see that in the next slide. Again, this is a good snapshot of each of the different tranches in a typical pre-COVID deal. Showing from December 19th to July of 23 today. The A's have been getting interest, the B's have been getting interest, and the A's have been getting whatever is left over to pay down principal. The B's have not been getting any principal payment in most deals. We've modeled up about 19 of them, and there's 1 or 2 that actually are paying, but for the most part, this is the generic picture. The C's are picking, so they're getting nothing, and basically their principal balance is just increasing from where it was expected to be. So the way it's working is that the A's are still behind where they're supposed to be. So until they catch up, they will continue to get everything that comes in through the waterfall. But as we saw in our chart, we're still 50 to 60% below where we were pre-COVID. So we think there's a long way to go for the A's to catch up in most cases. And so you can see the B is, balance of shortfall is getting even bigger. And then obviously the C's is even worse. And so the way it works is that once you hit the ARD on the deals, then it goes fully into sequential payment of A's and then B's. We're seeing a couple of deals where the A's are catching up, and if they do before they hit the ARD, then they would get their expected principal payment, and the B would start collecting its principal payment. But frankly, it's a long way off, and so this is the profile of the cash flow that we're seeing on most of the deals, and let's see how this impacts pricing and rating. So here's what we see on ratings. The ratings that we're showing here are the actual ratings today. As you know, most of the A's are always issued at A, and most of the B's at triple B. I mean, that's the game. You got to try to keep those investment grade for pricing. A's are still investment grade, though we do have a few that are triple B minus, double B plus. Almost all the B's have crossed over into non-investment grade land, so the capital charge on those bonds has gone up significantly. And I think all the C's are triple C or less. My guess is that these will stay like this. As aircraft are aging and collections are still not where they're supposed to be, we're probably going to continue to see these kinds of ratings. This has a big impact on the on secondary trading market for the bonds, and could have a big impact on how new issues are going to be structured and rated. Next, okay. So this all translates into the secondary market, which is where I spend most of my time. As you can see, last year we were looking at the Class A's, being probably 20 to 30% below par, and very low volumes. Most of the A's have actually ticked up a little bit from where they were, into low to mid 80s in general. Some are still way below. But I'm going to talk about this a little bit later. The problem as I see it is there's just limited trading activity, and the secondary market is really critical for investors to feel that there is some liquidity, especially when we have black swan events that occur. There's limited transparency into the aircraft lease details, and this makes modeling future cash flows very, very difficult to do. So without the detailed data for each aircraft, it's hard to establish what the underlying future cash flows would look like, and then what kind of PV and price that translates into. So consequently, the buyers and the sellers with limited price discovery, the dealer desks just aren't, doing, the detailed modeling to establish the bid and the offer that's needed for trading like they do on other asset classes. And as a result, we end up with lower trading volumes for the current bondholders, and potential new entrants are going to be very conservative in how they're going to model the future cash flows. So you end up with a pretty big gap between the bid and the ask. It is closing as things, appear to be getting better, but I think we still have a long way to go. Okay, so we're going to look now. Okay, John, I'll turn it back to you. Sorry.
Yeah, thanks, Evan. So I'll just jump in. So whereas Evan was focusing on his prior comments and the slides on the pre-COVID issuances, I'm going to turn the page and take a look at what happened in the post-COVID market. So again, I think to put into context, remember, interest rates dropped, very substantially in 2020, 2021, before shooting back up again in 22 and 23. And, we can see sort of a, causality or the impact of that. In 2021, we saw sort of almost a record number of issuances, 14 total in number. But that fell away in 2022 as interest rates rose, following the Russian invasion as well, where there were just 2 deals issued. And so far in 2023, we haven't seen any. So, clearly something, shifted significantly. I think, an observation that in, 2021, we saw quite a diversity of the underlying assets in the issuances. Some of those, the Sky, the Mercs, the Air Lease originated deals would have been composed of aircraft acquired during the pandemic, many through sale leasebacks, strong credits. And we saw ultra low pricing on the Series A, 2.4, 2.5%. So very, very efficient capital there. But I think there was a lot of diversity in 2021 as well. We saw in the regional space, Falco came to market. It was a single tranche of debt, low LTV, higher coupon, but the deal still got done. We saw 2 engine deals in the space, one by the leader Willis, another by named Thrust, backed by, or serviced rather, by GCAS, now AirCap. That got done. We saw Castle Lake come to market with the refinancing of its 2017 issuance, well received, despite the fact that the aircraft were quite aged at around 18 years on a simple average basis. So a lot of diversity, a lot of activity 2021, but in 2022, when the year started, it looked like that trend would continue. But as soon as the Russian invasion took place, there was a pause given the uncertainty, and then interest rates were allowed to creep up and pushed up from the central banks, and it significantly changed the attractiveness of issuing into this market. And as noted again, we don't see any 2023 activity. We can look at some of the different periods of issuance, looking at sort of the the pre-COVID deals, the COVID, and then the sort of post-COVID environment. And I think we see 3 very different environments and very, very different markets. So if we look at the top left, we can see the coupons for the A notes as one basis of comparison. And even though there was the pandemic and huge sort of risk broadly to the aviation industry and impact because of COVID. All that quantitative easing by central banks contributed in a major way to record low coupons for the 2021 issuances. Looking to the bottom left, we can see a difference. Not all of that sort of lower coupon would have been driven by the quantitative easing. Some of it was a feature of the credit quality of the underlying lessees in those issuances. And we saw a pretty dramatic pickup in the credit quality of the lessees in the 2021 post-COVID issuances relative to the pre-COVID issuances in 2019. Significantly better names, after the fallout, where credit, the importance of credit became much more understood. At the top right, I think we can see that LTVs on the senior tranches fell only marginally over this time period. They've largely held up, but in 2022, what we didn't see was there was no appetite, or spread was too large between bid and ask on junior issuances. So we only saw single tranche deals in the 2022 deals. I think at the bottom right, we can see, fairly stable, I would say. Simple average age of the aircraft in these issuance trended down slightly. We did see an uptick in the lease term remaining for the 2021 deals. This is a function to some extent of sort of the long-term leases that were, the long-term leases that were put into underwritten during COVID and then subsequently back levered in the ABS markets. Okay. If we jump to the next slide, Evan took you through a discussion earlier around the priority of payments in an ABS structure, and characterized that only if there's sufficient cash to pay a certain waterfall level does cash move down to pay the next level in the waterfall. And so we're showing a simplified waterfall structure on this chart, front to back, with the senior maintenance being paid at the top of the waterfall and equity being paid down at the bottom of the waterfall. And what we're comparing going across the horizontal axis is sort of the the year of issuance, and then the vertical axis we're showing is the height is the number of issuances. So what we're trying to show here is by year of issuance, how far down the waterfall are the deals paying. And so what we can see if we look at that the first couple points on the left, in 2015, we can see that there were four total issuances, two of which were not flowing cash beyond the top level in the waterfall, still trying to replenish that senior maintenance account. There are an incremental two issuances just behind that that are not flowing beyond payments of the A principal at the next level in the waterfall. If we move just a little bit to the right, what we can see is that for issuances 2016 to 19, with a couple of exceptions on some 2019 deals, very little cash is flowing beyond the A principal level in the waterfall. In fact, most C notes and E notes haven't received payments of any kind since the pandemic started in early 2020. And some have questions around whether or not they will ever, receive additional payments. We can see a markedly different profile for the 2020 to 2021 issuances, faring much better than the pre-COVIDs, many flowing down cash all the way down to equity as originally planned. And this is, to a large extent due to sort of the improved credit quality of the lessees that were in those deals. But it is interesting, we can see even some of the issuances in 2020 in particular aren't flowing that far. Some of those are as a result of the Russian invasion and the cessation of payments from Russian lessees. So that's sort of a state of play. The post-COVID issuances performing to a much better extent, although not flawless. The Russia threw a wild card in for everyone, but still continued challenges on cash flows for those pre-COVID issuances. Evan, a couple summary remarks and the outlook as well.
Yeah, sounds good. Thanks, John. So Just a quick synopsis of like how the market and COVID and Russia have impacted the various constituencies in the AirABS structure. The current bondholders who bought bonds at issuance pre-COVID, unfortunately, the collection just have not matched what was expected. And so the actual debt balances are higher. Given, that aircraft values haven't, have either dropped or stayed flat, the current LTVs make any refinancing very challenging. Once we get to that 7-year ARD date. So I think John mentioned, the Castle Lake did do a refinancing of one of their deals. That they've been extremely aggressive on selling, as have Carlisle, and that's been, proceeds have been used on those to pay down debt significantly. So, but most of the deals are not going to be able to be refied on the ARD. As a result, what do you end up with? You thought you were buying a 5-year average and a 7-year final on your A's and the B's, and unfortunately, we don't know when or if they're going to be paid off in full. So you now have a much longer extended duration of maturity on your A's and B's. And if your B's are interest only, some guys are just pricing it, as a long-term IO. And unfortunately, on your C's, it's very hard to know whether your C's are ever going to get anything. And the E-note holders, because they are below, even C's, it looks like that the E's did get capital returned to them pre-COVID, but haven't gotten paid anything since. The commercial banks that have been providing the warehouse facilities, basically they had to, convert their warehouses into term loans, at higher pricing, longer LTVs. So, again, the warehouse product is probably not there, right now to accumulate a portfolio. It's just now they turned it to old-fashioned term lenders. And for the lessors, the beauty of the AirABS product was that you could take up 25, 30 airplanes and sell them into a trust to get gain on sale of your older aircraft portfolios above book value. We don't see that happening, in the current market until things change a little bit. And so, the tier 1 lessors, they have to find other ways of managing their books than using the AirABS product right now. And then for your generic lessors that specialize in midlife aircraft and just needed AirABS for debt, I think they're turning to what are now, alternative bank financiers, which are aircraft savvy lenders, and are working with those lessors on structuring very interesting, senior sub type of structures for the existing portfolios. Next. So coming to the end, and I just wanted to highlight some of the issues that I see in the secondary market with respect to the secondary market, and maybe some suggestions. So right now, I believe that enhanced reporting of aircraft and lease information would facilitate the development of better cash flow forecast models. And again, this would provide bondholders or new investors, with better price discovery for the existing portfolios. I mean, secondary trading, on most other AirABS products, has come back, but not in our market. We have seen an increase in trading in Class A's, but the B's, are still, very, very minimal activity in the B's. The trading desks, ABS trading desk, they're generalists in most cases. So, they're concentrating on, other products where they're much busier. And so without, a good model for buyer and seller to agree on and then fight over the price, it's hard to discover, good price discovery for aircraft ABS bonds. My view is that if we had better information available to bondholders post issuance, and this would basically mean, what a lessor would get. We need some detailed information on the future, on any restructurings of the lease agreements. We on an MSN basis, we need maintenance information. Basically just good aircraft information. It doesn't have to be, anything which gives away anything. It's just just allows good people to model the cash flows out, and basically the end product is what does the PV of those cash flows equate to on a price to IRR basis. Right now, we see bids and offers, and it's hard to know what it means unless you've done a good detailed modeling on an MSM basis. And my view is that if we had that information, there'd be more liquidity. And let's face it, I mean, bondholders want liquidity, in good times and bad. And so with better modeling, I think investors would feel, that they liquidity, is better for them. And, there would be more secondary trading. And frankly, maybe this would lead to better price discovery for what the next new issue pricing would have to look like, based on where secondary bonds are trading. Okay.
Thanks, Evan. Then I may just close to take a step back and share a bit of perspective and outlook beyond just the ABS markets, and sort of our outlook for the near to medium term. I think we're well confident, fortunately, for us in the aviation and the investment community, that COVID's behind us. We hope that the Russian invasion moves behind not only us, but of course the people affected as well, and that moves to the rearview mirror, keeping those most affected in mind. There are ever-present risks around any sort of investing, including the aviation market. Geopolitical risks can seem more present than ever. There's a bit of uncertainty around economic activity and potential for softness, but look, unlike the last several years where air traffic demand had fallen off by more than half, keep in mind, air traffic demand has essentially nearly fully recovered, and is expected to continue to grow in years ahead. There's a cap on production rates from sort of Airbus and Boeing, part of it coming from constraints on the engine manufacturer and other supplier side. And that's tightening the supply-demand balance into a better spot for owners and lessors than where we have been in the last few years. I think we're seeing a march up in lease rates for used aircraft that need to be placed onto lease. There's a healthy level of extension activity ongoing at the moment, which is very different than what we saw a couple of years ago. And of course, as sort of lease rates increase for those used aircraft, they get put onto lease, and all else equal, the asset values pick up as well. So I think so those are all positive dynamics. We do think that there's still going to be a bit of pressure on aircraft leases that were underwritten in the last couple of years when interest rates were very low, because trading those to a new buyer, if they have to put new financing in place to procure those, makes it challenging to acquire at a price that would clear the current owner's book value. So still seeing a bit of perhaps a little bit of pressure on trading between lessors for younger assets still with longer term leases attached. I think overall, we still see huge opportunity for lessors to finance the fleets that are being delivered, notwithstanding the challenges that manufacturers are having. Delivery volumes are increasing, and that market's expected to be 100 billion in a couple of years. Airlines for sure will continue to look favorably on the leasing product for its flexibility, for its cost, and for access. So we still see ample opportunity, continued growth for the lessors, and those lessors who look at all of the available financing channels and are able to sort of access most efficient capital sources are going to be the ones that will be most successful in growing their own balance sheets and their managed portfolios and finding success. So we'll try to end on a bit of a positive note. to keep a little bit of challenge on the legacy ABS issues, but we're delighted to see the recovery of the industry broadly and the continued growth. So I think that concludes the prepared remarks. So perhaps, Jen, we will turn it back to you for next steps.
Yep. Thank you very much, John and Evan, for this very insightful market update on the ABS market. So for the audience, if you have any questions, please send in your question through the Q&A button at the bottom of your screen. So let's get into the questions. I think the number one question everybody sort of involved in aircraft finance industry have been constantly asking, when our next ABS deal will come back. So what's your crystal says?
I'm happy, Jen, to offer an opinion. I think we have an opportunity to engage with a number of constituents, sort of the issuers, the investment banks who structure, and the bondholders who buy these, and the agencies who rate the deals. And look, I think there from our perspective, there continue to be ongoing discussions between potential issuers and the banks and the bondholders around potential issuing. But heretofore, obviously in 2023, there hasn't been sort of an alignment of economics that are rational for all parties to commit to and to go in and to sort of execute. So when does it happen? I think at the first opportunity where it's rational for all those parties to line up and to do it. I'd say there's some possibility that a deal or two could get done in fourth quarter. I don't think that's beyond the realm of possibility, but more broadly, we're going to need to see that alignment, which still hasn't been there. But but I don't think we're anticipating a massive volume in the near term.
Yep, thanks, John. Our next question, I think, Evan, you kind of briefly touched about this topic during your presentation. The next question is asking, can we ascertain how much of the current ABS activity is effectively refinancing previous ABS platform aircraft? And if investors already exposed are renewing their involvement?
So I think there've been a few refinancings pre-COVID issues. As I mentioned, Castle Lake, I think, has done one or two. I think SJet's also bought back their portfolio. But I think for the most part, we're seeing those deals who have hit the 7-year anticipated refinancing date have kind of blown through it. And we basically are, just looking at a term out, of the A's and the B's as a result of that. I mean, the structure was built in, with this 7-year window. I think based on the expectation, given the amort schedules, that bonds would be paid down to, a level where the future LTV would make refinancing possible. For the A's and the B's, assuming the C's were paid off. Unfortunately, we're kind of upside down on that. The C's have now picked, so they are now substantially higher than where they were supposed to be. The B's have gotten interest only, so their principal has been payment balance is just flat, and we have seen the A's being paid down. So I don't think it's anything magical. It's just I just don't think that the market would accept a refinancing currently, given the debt balances that need to be repaid.
Mm-hmm. Yep. Our next question is sort of a follow-up to John's response to the first question. Do we expect the ABS recovery to be a gradual, slow recovery, with a few trying and testing the market and others waiting to see, or a pretty fast demand recovery?
Yeah, I mean, I think from, from in the current sort of, status quo, type of market, where interest rates are, lessors are evaluating, they understand, they have guidance from, their engagement with bondholders, their engagement with investment banks. I think they have guidance to understand expectations around where the economics would fall were they to come, to the market, with an issuance. And at the moment, they're evaluating, okay, what if I sort of, what's my option if I do a capital markets deal versus what are my alternatives in the commercial financing market? And heretofore, right, they're, the preference is sort of the commercial financing. It's making more economic sense for them to choose that path. So I think what's good, there's going to have to be, the first deal that comes to market, it's going to have to be one that, for some reason that just flips the switch and, against those two alternatives and those two options, there's a set of assets and, associated cash flows that meet the requirements to make the ABS issuance the most economic. So I don't think that, you're going to necessarily see this massive, unless like interest rates moves or the commercial lending markets shift dramatically. I don't think you'll all of a sudden you'll get one done and there will be this massive explosion of volume. I think there will be, that first one will clear the path a little bit, and then perhaps there will be some others that are, want to be a follower, but I don't think it's going to overall shift the broad economics of whether or not it's rational to issue. So, unless something changes on the attractiveness of the debt or the capital markets or the commercial loans, like it's probably more of a gradual reopening. Some of it's going to be associated, I think, with the asset side, where the lessors are building up portfolios now in a stronger supply demand environment. So lease rates are higher, interest rates are higher. So to the extent that they're continuing to add into those portfolios that exist with higher lease rates, over time, the lessors on the asset side are going to be building portfolios that are going to be able to support the higher interest rates on the ABS side as well. So my camp is in my foot's very much in the gradual issuance. But Evan, you may have a confirmatory or a different view.
No, I agree. I mean, one of the big trade-offs, in doing an Air ABS issue for the issuer is the cumbersome rules that they have to then live by once those bonds are issued with respect to those airplanes. And basically the trade is, okay, I'll do that because, my cost of capital on issuing an ABS deal is going to be less, significantly less than if I just did, an unsecured issue or, a secured issue, with one of the banks. So, right now, I think you don't have that trade. And so I think, basically lessors are saying, I'll pay, I'd rather just pay a little bit higher, for a generic, secured or unsecured loan and have full flexibility on managing, the aircraft, in that, that's the collateral for that, for that product, then lock into, a 20-year program where I've got all these rules that I got to live by with respect to these 25 aircraft. So I agree with John. I think it's going to take time. If we go back to 2014, I think Castle Lake came out with an issue or two, and then it gradually picked up, as things got more attractive. So we'll probably, my guess is we'll see something similar to that.
Thanks. Similar on those topics. So what do you think the potentially going to be structural changes for the next issuances?
Again, if from the perspective of the bondholders, I would suggest the following, and this may be a little bit not unworkable, but I think if you think about the Air ABS product as kind of a residual value transfer from the lessors to the bondholders, I think it makes perfect sense, when you do that for a midlife aircraft, up to 18, 20 years of age, let's say. So maybe one of the things they could think about doing is matching, at the amort of the debt on an aircraft basis associated with the age of the aircraft. So if it's 15 years old, and there's, maybe you amortize the debt on that airplane over 3 years. If it's a 10-year-old airplane, maybe you amortize the debt on 10 years on that airplane. But essentially, you better match the amortization of the debt with the age of the aircraft. And then I would also, loosen up the rules once the airplanes hit certain ages. Once the plane's 16, 17, 18 years of age, I mean, it's most likely going to go to a third-tier carrier if it gets released. So is it really important to maintain, the rules associated with, concentration limits, et cetera, once you get to a certain age? I mean, this would just allow a much faster liquidation of the portfolio, and faster, possibly accelerate the repayment of principal to the A's and the B's. I don't know. So those are just two ideas that I would suggest.
Yeah, thanks, Alvin. Those are very interesting ideas. And in terms of asset characteristics, what do you or John think likely to be in the next deal?
Yeah, I think, look, I think good question, Jen. I think it goes back to, my sort of, earlier comments. The next deal I think has to have, some characteristics of, relatively strong lease rates relative to the current interest rate environment. So you have to go, back to, to look at, over the last couple of years when lessors have been able to assemble, portfolios of aircraft, where has the market been strong? It's probably not the, it's probably not sort of the used narrow body space, and it's probably not the new, new narrow body space, because, one, the used market was soft, and then the new market was very competitive with low lease rate factors. So, probably pushes you to think, okay, well, where was it strong? The freighter market was, quite strong for a period of time, and, lessors who, it's probably softening, at the moment, or there are some indications that supply demand balance was changing. But I think lessors who underwrote leases over the last couple of years in the cargo space on a relative basis would have done quite well. So, is there another cargo, transaction that potentially comes to market? Maybe. The other, you look, historically there have been a number of, engine ABS issuances over time. And, if you look at sort of, the current, there's a huge amount of strength because of the sort of, traffic recovery, that has, taken place. And, there's been a sort of rampant increase in the number of engines that need to go through the shop, which spurs demand for spare engines and engine leasing. And that's caused, lease rates to pick up very significantly there as well. So I would say, hard to pinpoint exactly where it is, but I'd say, it's probably not in the more liquid narrow body space, but, maybe one of the more sort of esoteric classes that have had, very strong rent generation characteristics over the last couple of years.
Thanks, John. Given the time limit, we're probably gonna just be asking the last question from the audience. The last question is asking, who is currently providing the financing of the aircraft that the ABS market used to provide over the last 10 years? Is it lessors now?
Yeah, so I mean, it depends on, what we define as financing. If it's just debt financing and the issuer is basically keeping the equity, I think then we've seen a number of non-bank financial options arise, which are aircraft savvy people behind it. And so I think they're structuring the debt, almost like from a lessor mentality. And I think they're providing a lot of alternative financing for the debt. What was the debt portion of Air ABS issuance? On the sales side, I think right now it's tough. There's certainly a lot of aircraft trading going on between the big lessors. So it's, where the beauty of the AirABS product is you could take, 25, 30 airplanes, and sell them, into a vehicle. I think now, the trading that's happening is kind of, 5 to 10s maybe, or, 3 to 7s in size. And there's probably a trade-off of, book value, to get to certain book values with that combination of assets to make it work. So I think that's what's picking it up. But as John, as the chart John showed, earlier, definitely been a big fall off, in trading, aircraft trading volume as a result of the closed AirABS market.
I think I'd say, just to add on to, Evan's point, I think the large, commercial banks, the European lenders, the Japanese lenders, et cetera, to my mind, are quite active in the space. And I think, when the capital markets were really strong and, low yielding, they found, the lending environment to be, less attractive, and sort of many, pulled away. I think given sort of the flip, now the capital markets, pricing would be very high. I think commercial banks, are seeing opportunities to put money to work. In many instances, it's on sort of, perceived strategic relationship basis, or for certain names. So, the tier 1 lessors are well banked, and some of the tier 2 who have, maybe that are sort of, associated with or backed by, certain large investors or funds are seeing quite a bit of appetite still from the commercial banks. So I'd say that's who's stepping up at the moment.
Yeah. Thanks very much, John and Evan, for today's very interesting and insightful discussion. And thanks to all the audience who joined today. Please know that this session is recorded, and the recording and the presentation slides will be published on ISTAT website within the next 24 hours. And we're looking forward to seeing you in our future ISTAT Learning Lab sessions. Thank you.
Okay, thanks everyone. Thank you.
Thank you very much.